Welcome to Allenberry Reports TV. I'm your host, Allenberry Labucan from allenberryreports.com. Each time this time of the year, now that we're into December, we one of the big projects that we do every year is we put out a outlook for the year ahead. Last year, around first couple weeks of January, we put out our Outlook 2011, and that's what we'll be doing again this year. Basically, what we try to do during that period is, well, actually, even before we put out that outlook for the year ahead, we start by looking in December, November, late November to December. We start the process of sort of evaluating what we talked about in the previous year's outlook. We've been doing this for several years now. And then looking ahead at trends we see developing. And so we're not going to talk a lot about specific numbers, but I am seeing some things happening here at the end of the year that give me some really good targets for trends that I think that will be friendly to investors and pay off handsomely in the year ahead. Now, recently we've been putting out a bunch of shows, and some of those shows, if you're interested in looking at any of our past shows, just go to our website. If you're watching this on our website, just look above me, and you'll see the ABR TV guide. In there we've got a rundown of all of our past shows. We include the title, the date, and a overview of what we talked about in the particular show, as well as links so that you can go watch those shows. And some of our recent shows, our most recent one, we talked about it being an ideal time to be a contrary investor, and that was out on November 22nd, and the market promptly moved in the right direction for us, and we don't really put out those reports to try and time the market as far as a within days kind of a situation. We're more looking at trends that are developing and strategies to take advantage of those trends. And in some of the past shows, we've talked about the value of being a stock picker. That it's a great way to outperform the market if you're able to find some high quality companies. We talked about why we prefer gold stocks over gold. We talked about all the fear and loathing in the stock markets, and also past shows about why we're bullish on the stock market. And I think that bullish on the stock market show was September the 7th. So as the markets were, under pressure, we came out with the reasons that we were, bullish going forward for stocks. And so some of the trends that we're seeing right now that are, we talked about, our strategies anyways, to take advantage of the trends that we see, is, for one, we see with the high level of fear that's out there right now in the investing community, one of the strategies is to be looking to buy the dips when markets are on the downtrend, and buy them when things are cheap, and wait for the next rally, and trim some of your gains into that rally so you can prepare for the next sort of bearish type of a trend. And this has been happening all year, and we think that it's going to continue. There's plenty of people out there that are highly fearful now, even though we're seeing signs to be very bullish, especially when it comes to stocks and gold, silver. We're liking what we see with copper, uranium, commodity stocks, tech stocks in general. Wherever you can find bargains in stocks, I think right now is a great time to be getting more aggressive towards stocks and commodities and resource stocks. They've been paying off handsomely for a number of years, and because the fundamentals are solid, and nothing has changed with those fundamentals. In fact, if anything, when we're looking at stocks in general, we would say that the improving fundamentals are being ignored. And going ahead, we had a very bullish outlook for gold, for stocks in general, for other commodities, and we've seen a lot of that transpire during 2011. Now, going forward, we're also seeing some very exciting trends developing. We think that the bull market for specific commodities that we follow, such as gold, silver, oil, uranium, diamonds, are bullish. This is a good indication that the global economy will be stronger in 2012. We think that things are going to get stronger in the United States as well. We're seeing, more reasons to be bullish than reasons to be bearish. But when you have a high level of fear, I mentioned this to a friend of mine the other day, when there's a high level of fear out in the market, everything is bearish. Every piece of news is negative. But that's not reality. It's more emotion-based, not fundamentals-based, and we are definitely seeing signs that to be bullish towards those assets. And so on today's show, we kind of wanted to give you a heads up for some of the things that we're seeing. We'll continue to sort of evaluate how we did over the past year and prepare for some of the calls that we're going to make in our Outlook 2012. But without getting into any specific numbers of where we see gold going, where we see the Dow Jones and the S&P 500 going, where we see stocks in general going, we are seeing some very bullish signs in a number of assets, that classes that we follow closely, that we're seeing that things are going to continue. For example, gold. We definitely think that it's going to continue its long-term bullish trend. The fundamentals that drive gold supply and demand. Supply is weak, demand is strong, and we think that will push prices for gold higher. Same thing with silver, same thing with copper, same thing with practically every commodity that we follow closely has gone through long-term periods of underinvesting that are not preparing the market well for the demand that's coming from emerging and developed economies. And so those are some of the things. We're getting really bullish on stocks these days, and one of the key reasons is that because of that high fear factor that's out there, investors are losing sight of the fundamental improvement and quality of the many of the S&P 500 type companies. There's a lot of good things happening in with those large industrial companies, and it doesn't look like the market's really getting that. And so we think that there's a buildup of a bullish trend that will be very strong during 2012. And so those are some of the things that we're seeing, that we see friendly trends coming ahead, and we're going to talk more about that as we end this year and go into the early part of 2012. So just wanted to drop this video today to talk about some of the things that we're seeing currently, as well as what we see going ahead for some trends that we think will be friendly to investors. And so on that note, we'll wrap up the commentary part of the show. As always, the show and our reports are for information purposes only. We aren't making buying or selling recommendations. It's important for you to do your own research and speak with your financial advisors before making any investment decisions. We're always trying to grow our audience, and any efforts you make to send out emails or mention us to your friends that follow the markets, we really appreciate that. Also, we have to send some thank you messages out. We use youtube.com as our primary website to produce and broadcast these shows, and they have a great platform for anybody that wants to do online video shows, and we highly recommend them. Also, if you're watching on our website, you'll notice to the left of me that we have banners. Those banner sponsors are really important in us being able to do the work that we do. So we thank you. We wanted to thank them as always, and also recommend that you do some homework on those companies. Just click on their banners. It'll take you directly to their websites, and they've got plenty of information on their websites, and you can do some good research on those companies. And of course, to you, the viewers, if you didn't show up to watch the shows, we wouldn't have any reason to do the shows. So thank you very much. And for anybody that's not currently, if you want to keep up on what we're working on, one of the best ways is to be on our email list. We send out notices whenever we have any work out, and it's a great way to keep track of what we're working on. And there's no charge to be on our email list. You can, if you look on the website and look to the bottom left there, you'll find the thing to subscribe to the email list, and we'll keep you informed on all the work that we're doing. We got an exciting new project that we're going to be launching in the next couple days. So, and of course, we always send those out to our email list first. So, if you want to find out what we're doing and find out about our new project that we're launching here pretty soon, sign up for our emails. So on that note, we really appreciate you tuning in. We'll talk to you soon, and have a great day.